All right, good morning. Sorry I had to reboot everything, routers, extenders, PCs. I don't know why. But anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's get our macro on. Let's log into the QuantBox database on the Google Cloud. Yeah, Taylor Swift a billionaire today, huh? That must be nice. Good for her. All right, let's take a look. Oil's trying to make a comeback. It was down there, what, 82, 83? Trying to make its way up. Gold's still stuck on 2,000. We've been there, what, 3 days around that price? So stable. S&P 500 down yesterday. Probably going to be a bouncy bounce today. And then we'll find out what happens all of tomorrow or next week, I should say. Next week, well, we have a Fed decision. And it's interesting because the Fed have already told us. I mean, I laugh because it's so debatable. Everybody wants to talk about it and debate it. I'm like, well, they already told us they're going to raise. So I guess the debating now is whether things have deteriorated so much that they don't raise. And I get that. I laugh though because they debate, and even without even if there was no geopolitical risk, we'd still be having this debate. So in that case, I'm like, we already know. But nonetheless, are they going to raise or are they not going to raise? And well, that's the big story for next week. So we'll have to be there when that happens. Yeah. Yields, remember they were tickling 5.0. And then I think I bought the 20-year when the 10-year was about 4.96. Not bad, pretty close. And now it's down a little bit. So we'll see. I want yields to fall. I want people, if they get afraid of the stock market falling significantly further, when they're afraid, I want them to behave in a certain way. And that is to buy bonds. And we get correlation back. There's supposed to be an inverse correlation. Traditionally, what your grandpa told you was when the stock market fell, the bond market rises. The funny thing is, well, since we've had manipulation since 2008, that correlation hasn't been true. And in fact, just even recently, stock market's falling and the bond market's falling. And the bond market's falling hard, like not a little bit. The bond market's down like 25% this year. Like, you're like, wait, what? Yeah. So, wowzer. What do you do? Well, I wouldn't recommend a 26 or 60-40 stock portfolio, that's for sure. That may be dead forever. Anyways, we'll see. So I did gobble up some, which is interesting. So I want to keep it below 5.0. Nice. And Bitcoin still way up there. Like it's down 1%, but if you look at the chart, it's like a rocket ship. Just amazing. Looking at the yields for the day, flat so, right? Flat so. Risk off on the long run, but it's working its way back, which is kind of interesting. Now, it feels to me, and this is why we have QuantBox, it feels to me like feels much worse than this. But remember, QuantBox is a machine. It doesn't feel, but it is pulling in the data for VIX, S&P 500, gold, dollar index, okay, yields on treasuries, right? The value of the Japanese yen. It's looking at a lot of things and spitting out the data. It's flat, short and medium terms flat. It feels very negative to me. So maybe I'm off. I got to be careful. Okay. Got to be careful. Boop, 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 boop. Okay, so what's going on from the European session? Uh, Sorry, I got to drink my breakfast. Doesn't that look good? Yeah. Sorry, I was busy rebooting my machines and not having my breakfast. All right, so oil back up. Okay, cool, cool. We had that bottom. Okay, we've talked about that many times. Japanese stock market today is up. Remember how down it was recently? There's a little bit of risk on here, a little bit of risk on NASI. Who reported yesterday? Intel and somebody else, and it was good. But previous to that, it was mixed, and so okay, a little bit of good news. S&P 500 not buying it because I shorted it. sorry, everybody. I moved the entire market. Yeah, I apologize, but yeah, so everything is up except the thing I shorted yesterday. All right, cool. Well, good for me, I suppose. Swissy, weak. Well, that's risk on. That's why all of a sudden those gauges are swinging back around. Cool. Interesting. I'm okay with that, even though I've spent some money to hedge against the drop. That means if everything turns right as rain, I'll lose money on the hedge, but it's okay. It's like saying you're wasting money on house insurance. Well, I was worried the house was going to burn down. I mean, so if you're trying to get your worries to go away, then then the insurance does what it's supposed to do. So I'm hedged just in case there's a collapse coming. Cool. And if it doesn't, great, because I'm mostly long anyways. So you just have to look at it that way. So, anyways, there is quite a bit of risk on here, right? DAX is up, NASI is up, oil is up, Nikkei is up. Sweet. Cool. Right on. So I want to watch that throughout the week. I pointed this out in last night's day trading group. Bitcoin is up 20% for the week. No, not for the year. 20% for the week. Wow. But what we've seen to get a bigger picture, and this is why it's here. Remember, this used to be daily, and I'm like, I have scatter plot. I don't need daily. See, I put this here for Denise. There you go. I did it, honestly. And what she was doing was smart, right? She was looking at all this data on the daily and then comparing that to longer term trends. And I'm like, well, that's what a scatter plot is, right? So then I just invested more time and money into making a better scatter plot. But nonetheless, so then as history goes on, then I take this and I'm like, well, this is irrelevant now if I have a scatter plot because I can do what Denise was doing, which is comparing short term versus long term. I can do it way faster with the scatter plot. So how do we do this? So the next evolution was I made these weekly. So now it's, let's say, long term. For a trader, a week is a long term. Long term versus long term. And um, so let's say like Nasdaq is up a little bit today, Nikkei is up a little bit today. How does that fit in the longer run? Right? Oil was up today. Well, it's still down 5% for the week. Nasdaq is still down 4% for the week. S&P 500, okay, down 3% for a week, right? That kind of stuff. Like they're still down. It feels like today isn't up, but they're still down. Okay. Burned went long the S&P. That's fine. It would be about the same rationale, but as like I guess we can take a look at that. So burn went long. I get what you're doing, and I'm kind of doing the opposite, but for the same reason, maybe. I don't know. Let me show you. I guess we'll do that. Let's go into the S&P. Okay. Oh, you're getting a oh scorecard summary. Hang on. Was it? Yeah, it's this one. Okay. Someone's messed with a data set, and there was another one somewhere else. All right. All right. I'll leave that. All right. I'll send that to the team. Thank you. Mhm. Now it works the same database is displayed here. And you can organize these, by the way. Okay. So I know it's doesn't help. I mean, it helps a little. It's not great. You can mess around with the categories. Okay, like that. You see? So you might be able to grab that. Yeah, yeah. So let me put it back to this one and find out what's going on. Cool. I love it. I love it. Friday and an opportunity yell at and belittle other people. Nothing makes you feel better than holding somebody down. Public humiliation. I love it. Awesome. Cool. Thank you for that great opportunity. All right. I will yell at the developers. Oh yeah, we were going to look at. Let's just go to this one. Okay, we're going to talk about the S&P 500. So burned went long. I get it. Oh, that's snazzy. We wanted to talk about S&P. Okay, Burned went long and I went short. All right. So first of all, I am long. Okay, I have a portfolio that I'm managing, and I will be long forever. Okay, so that's that. And burned, you're buying. I'm actually buying too. Every month I buy a little more. Every month I buy a little more. So down is okay with me because on the long run, that's actually where I make my money. And the idea of that is when you buy on the way up, so let's say you're buying, here, and don't look at my chart. Okay, this is hard. I'm gonna throw this out. Where do we go here? Okay, there we go. Less distracted. All right. So when you buy on the way up, so there's a good month and you buy some more and you buy good and you buy some more and you're buying high, inevitably there's always a pullback. It's natural. Okay. And what happens to those values? Well, you end up breaking even on those. Like you're not really making money on those. But then the market returns and you go up. This could be seasonal, this could be business cycle. Seasonal being 1 year, business cycle 8 to 10 years. But nonetheless, in my humble opinion, the way to invest is just to always invest. Okay. Okay. That's the first one because, this is really where you're making money. And this just happens to be you betting on the entire market, anyways. Okay. Now, so Burns buying, and I'm saying, well, I'm long and I am buying. But so then when I said, well, that I'm short, well, I recognize that the risk of me being in this part of the cycle exists. So I am trying to protect these troops a bit. Okay. And so I shorted the S&P 500 yesterday, made 4%. Thank you, leverage. Okay. Double-edged sword, though. We're going to have an update. You just know it. Right. But nonetheless, I'm trying to protect these troops. So I'm shorting literally to hedge. And then using things like seasonality, I can anticipate, okay, when to remove the hedge and then put that money back in. The second part is you have beta. I'll denote it like that. You have beta where you probably want to be in high flying stocks like this. So let's say growth. You want to be in growth stocks. You want to be in NASDAQ. Okay. And then this period, you're like, oh. So not only do I sell the S&P 500, I exited NASDAQ and I could do things like buy Dow. So here you have a high beta. Here you have a low beta and hedge. So I'm lowering my volatility by investing into things with less volatility, less beta. And I'm hedging to lower the volatility even more because now the portfolio doesn't fall as much because what's in the portfolio doesn't fall as much. Plus I'm using a little bit of cash. Actually, I went to 16% cash and now I'm 8% cash, 8% actually short, both of which are lowering the volatility. And then when I figure that we're in this part of the cycle, then I move back out of Dow and back in, which is more, think of it as value stocks. And then I rotate back into NASDAQ, and now I'm in a higher beta. And you see, and I remove my hedge, and my cash is trash. So I invest that heavily into higher beta again. So it's just where I'm in the cycle. And I'm not really short the stock market. I'm lowering my portfolio beta. That's hot, right? Sexy. Yeah, I love money. Love it. So, anyways, that's what's going on. So, if you bought the dip, great. I may not want to do that with you, but I'm okay. I might be the right thing. Who knows? But when I analyze this, boo, 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 okay, I see this lower low, lower high, lower low, lower high. Okay, lower low, lower high. I get into a spot where I'm almost required by the laws of nature. I have to either get out or hedge. Okay, and it was all of these things, and so I need to prepare as if this is going to happen next. And if it doesn't, it's okay. I lose a little bit of money on the hedge, but in the long run, I'm going to make money. Okay. Yeah. So I'm just in there. I have to do something. Okay. I hope it goes up. But when I look at it this way, okay, you can see that there is some risk here that this could come down, like what is this, about 50%? I mean, like there's a lot of down that could happen. So I have to prepare as if that will happen. Okay. So if we go from where we were, so we were way up here. So now I'm hedged. So if I, let's say, hedge all the way down to here and then exit on a bounce, okay, then that's money I made. I made money. That one investment would have made money. And then I plow it back into buying the S&P 500 again. And then we go back this way, and in 6 months, everybody's right as rain. So the net asset value fell and then rose, but I took, I made some money on the way down and then bought back. So actually I increased my net asset value through my hedge versus passively just doing nothing and say, it'll come back. Okay. Well, my goal is to buy more assets. My goal is to own more and more and more and more S&P 500. I'm not even really interested in really the net asset value. So it's more like, what can I do with these mix of assets so I can accumulate more assets? That's the goal. I'm not even really focused on the price. I'm trying to accumulate, trying to get big, trying to get scale. Okay. I want to own more assets because It's like, think of it as real estate. The more apartments you own, the more rent you collect. That's the game. Well, what about the price? Irrelevant. Why is it irrelevant? Every time you buy in a building, let's say it's a simple model. You're not, let's not make it overly sophisticated. Let's just say every time you buy a building, the renters pay off the mortgage for you. Now, really, you don't play the real estate game that way, but let's just think of it that way, right? Or let's just say you buy a second house and put a renter in it. Who's paying the mortgage? The renter. Who owns the mortgage? You. So let's say that doesn't come with any troubles like you have to mow the lawn. Let's say none of that existed, right? You just poured concrete everywhere. You put a tiny house in the middle of a tennis court and you rented it out, right? You're like, look at the lawn, it's green every day. You're like, it's concrete painted green. No mow, right? But the thing is, the renters pay the rent, right? And then you take the rent and you pay down your mortgage. So in 20 to 30 years, you own the house and you invested no money. You got all your money back. The bank has been paid off. You own it free and clear, and you never paid any of it yourself. So under sort of like a concept like that, how many houses do you want to own when you get the houses for free? I want to own them all. But then you get sick of mowing lawns, right? So you're like, forget it. I want to own an apartment building with 100 doors on it. Now you got 100 renters paying one mortgage, and you got one electrical bill and one maintenance bill and one, lawnmower. That's how you scale. So to me, the net asset value is just the value of the property going up and down through different cycles, but it doesn't matter. It's an illusion. The building's still there. If it truly is an apartment building and the value of your apartment building dropped 10% because it's a bad market, when you go visit your apartment building, it looks the same as when it was up 10%. You're like, it looks exactly the same. It's an illusion, right? So in that case, net asset value, which is what you have in your portfolio, it's a tertiary concern. I mean, you don't want it to fall 50%, there's no doubt. But if the entire market falls 50%, what does that have to do with me? Right? I didn't pick, I invested in everything. So if the market falls 50%, going back to what Bern was saying, well, that's why I have to hedge now. At least if I do it right, maybe my portfolio only drops 25% in net asset value, but I'm still collecting rent. Okay. So, anyways, that's what I'm trying to do. Now, interesting enough, my short position pays me almost 4%. I think it was 3.83% dividends. And I'm like, yes. So if I held it for a year and broke even, I still make 4% in income. So anyways, kind of interesting, huh? So there we go, portfolio construction. So it's going to be a long Friday. Long Friday. So anyway, so that's that. And that's where we are. That's what's going to be the theme for today. But like looking at NASDAQ, like, could this happen? Yes. That's why way up here somewhere, I reduced my exposure to the NASDAQ and rotated over to the Dow. Now the Dow is also down, but a lot less down. That looks like a double bottom. This looks like yet another lower low. What's the difference? One is losing money faster than the other, and that's the beta I'm talking about. Cool. So, going to be an interesting day. I'm going to be staring at the stock market. I think I'm doing an FX Street webinar today or live stream on their YouTube. But I don't know when, and I think they've forgotten, so I have to remind them. They didn't send me the login link last week. It was funny because I was so exhausted. I'm like, okay. Yeah, right. I didn't feel lovable and I wasn't being loved. So anyway, so I'll ping them and I'll try. I want to set it up for 9, not 8. So anyways, I'll ping them. And one of the things I wanted to do today, excuse me, me, ma. 20 dwarves, 20 dwarves. All right. So one of the things I wanted to do today was tradeplans.ai, review some trade plans. And I'm trying to get a process too where I do YouTube shorts with them, where I pop up a YouTube short per trade. It's complicated, takes a lot of time. But nonetheless, if you could post some trade plans this morning, that'd be great. And then I'll review them over at FX Street on their YouTube channel. Right. And again, you're anonymous, but I'll give you some feedback. And I'm going to try to set it up at 9, just a little bit later than usual. Okay. And Bern says, wasn't S&P 500 seasonally supposed to go up? Yeah, that's the problem. I believe it's geopolitical risk that's holding us down, freaking people out. So what did I do? I shorted the stock market and I bought bonds. That's the lesson I'm trying to give you. Is it the right thing to do? I don't know, but that's the thing you should do if you believe fear has taken over logic, let's say. What normally happens, S&P 500 goes up. Is it going up? No, something abnormal. So we call that risk, and I'm doing something because I see the risk. It's real. Okay, cool. So anyways, peace on earth. May the pips be with you. May our profits be above average. Maybe I'll see you over at FX Street, 8-ish, 9-ish. We'll find out. Cool. That's exciting. Yeah. Cheers.